Today, we're jumping right into a pretty dramatic shift in global economics. We're going to look at the anatomy of a new trade war, and honestly, as the title here suggests, it kind of feels like we're all just riders on the storm.
All right, let's just dive right in. The source material for this, from Allianz research, it paints a really stark picture. A huge economic event has just unfolded, and it's created this fog of uncertainty that's as thick as what we saw during the peak of the COVID-19 pandemic. The calm waters of global trade have basically been churned into a tempest, and right now, nobody is quite sure where the currents are going to take us.
And here it is. This is the lightning strike that kicked this whole thing off. 130%. That is the staggering new effective tariff rate the United States has slapped on Chinese goods. A number that high is almost unheard of in modern trade, and it's the absolute epicenter of the shockwave we're about to unpack.
So, how on earth did we get here so fast? Let's break down the timeline, the sequence of events that really ignited this economic firestorm.
You know, it all happened in just a handful of days. It was a whirlwind. On April 2nd, the new administration announced these reciprocal tariffs that went way beyond what anyone expected. By April 5th, a 10% universal minimum tariff was already in place. But the biggest shock, the real jaw-dropper, came on April 10th. That's when tariffs specifically on Chinese goods just exploded, jumping by an additional 125 percentage points. Just a massive, massive leap.
Okay, this chart is really something because it shows you exactly how things just blew up. It's a waterfall chart, so it walks you through it step by step. We start over here, pre-Trump 2, at a pretty modest 2.5%. Then you see these smaller hikes on certain partners and goods, and then, bam, this huge leap from the Liberation Day announcements. It just rockets the total average rate to 25.5%. That is a level the U.S. hasn't seen in over 130 years.
Okay, so with a shock that big, the first ripples, they're always felt right at the center. So let's look at what happened to the U.S. economy right away.
And this slide just lays it all out, side by side. It's a perfect illustration. Over on the left, you've got this global economic uncertainty index. See that massive spike on the far right? We are right back to COVID-level panic. And on the right, well, that's what it means for the real world. You can see the forecast for U.S. GDP just dips right into negative territory. This isn't just market jitters, folks. This is a direct line to a mild recession in 2025.
So, as if a slowing economy wasn't bad enough, these tariffs are also pouring gasoline on an old fire: inflation. The forecast shows U.S. inflation, which was kind of settling down around 3%, is now expected to surge all over again, peaking at 4.3% in 2025. And that creates a massive, massive headache for the Federal Reserve. And this all brings up the dreaded stag word: stagflation. It's just a toxic mix, right? The economy's stuck in the mud, that's the stagnant part, but prices are shooting up, that's the inflation part. And it puts policymakers in this terrible bind. Do you cut interest rates to try and boost growth, or do you keep them high to fight inflation? The report suggests their hands are tied, they'll be forced to fight inflation, even if it means sacrificing economic growth.
You know that old saying, when America sneezes, the world catches a cold? Well, let's see just how this storm is starting to rage across the globe.
2.3%. That's the new forecast for global GDP growth in 2025. Just 2.3%. To give you some context, that is the worst growth we've seen worldwide since the pandemic. The U.S. trade war is basically acting like an anchor on the entire global economy.
But here's the thing, not everyone is responding in the same way. We're seeing these two totally different playbooks emerge. You've got Europe over here, kind of getting hammered, but trying to cushion the blow with government spending, especially from Germany. And then you have China playing total offense. It's hitting back with its own huge tariffs on U.S. goods, and at the same time, it's pumping stimulus into its own economy to keep that growth engine humming.
Okay, so we've looked at the big picture, the impact on entire nations. But what about the companies that are actually on the front lines of all this? How are they trying to navigate this turbulence?
Well, they are scrambling, and it looks like a three-step survival strategy is what everyone's trying to do. First, front-loading. Basically, buy and ship everything you can right now to build up inventory before those tariffs really bite. Second, diversification. Frantically trying to find suppliers anywhere but China, looking at places like Vietnam or Mexico. And third, price adjustments, which means either passing the costs on to you and me, the consumers, or trying to squeeze their own suppliers for a better deal.
And if you want proof of just how freaked out boardrooms are, you got to look at this chart. It's tracking how many times the word tariffs gets mentioned in U.S. corporate earnings calls. Just look at that spike. It's gone from just background noise to literally the only thing anyone is talking about.
And this number,
This shows the real cost for the companies that just can't adapt. We're looking at a projected 16% jump in business insolvencies, that's bankruptcies, in the US for 2025. This isn't just some abstract number on a chart. We're talking about real businesses going under and real people losing their jobs.
So, after all this chaos, all this disruption, where do we go from here? What does the future actually hold as we try to peer over the horizon?
Well, it looks like the financial markets were completely caught by surprise. I mean, they totally misjudged how serious these new policies were, and now you can feel the panic setting in. Investors are running for the hills, basically. It's what they call a risk-off mode, selling anything risky and piling into safer assets like government bonds.
So the report basically lays out two very, very different futures, a real fork in the road. On one side, you have this long-shot upside scenario they call the Great Acceleration, where tensions ease, technology saves the day, but they're only giving that a 15% chance. The much more likely path, with a 35% probability, is the downside, full-blown stagflation, where this trade war just gets worse and ends up tipping the whole world into an even deeper recession.
And this quote from the report, it just perfectly captures the mood right now. Like a fog of war, it is unclear what the final tariff landscape will look like, but the cost of uncertainty is high. And that cost, it's being paid right now in slower growth and higher prices for everyone.
And that leaves us with one final, really crucial question. We're obviously at a crossroads, but is this whole thing just a temporary storm that's going to blow over? Or have the fundamental rules of the game just changed for good? Is this the start of a whole new and much more volatile economic climate?